Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is June 14th, 2024. S&P sitting at 54.21. My name is Ian McMillan, and today we have the pleasure of being joined by Kevin Ferrari, one of our lead market analysts that has been on the podcast many times. So excited to talk to him a bit about what's been going on the last week in market. Anywhere you'd like to start, Kevin?
I suppose we might as well start with the elephant in the room, right?
The obvious.
Not in tech, or outside of tech, I guess we should say. The S&P is the only other place to be, really.
Yeah, and we were just talking, so you said tech now up to 31 or 32% of the S&P.
Somewhere in there. Like a little over 32 actually now, I think.
And you're right. You pull up an S&P weekly chart, you pull up a NASDAQ weekly chart, especially the NASDAQ, very strong trends. I don't see what the big deal is. Clearing a pretty strong market. But
yeah, the NASDAQ relative chart looks really nice.
It does, yes. NASDAQ versus S&P breaking to all-time highs this week, above where we were at in January. And when you zoom in on that chart, as wild as it sounds, right, you could definitely expect this relationship flat since Q4 2021. NASDAQ got crushed in that bear market. I think a lot of people forget that. It came back very quickly. Obviously, we had 2021, which was a mess for breadth. And then off the lows of 2022, that bear market, NASDAQ has outperformed, but in the context of the grand picture, I don't think you can be surprised if NASDAQ spends another months.
No.
It's got a long way to go.
Right.
Next, with, I don't know, does the Max 7 and the NVIDIA and the Apple, right? And we had a huge week from Apple.
Well, oh, yeah.
Yeah, huge week from Apple, which is definitely a big part of this. In fact, I believe it was, Monday, we had gotten back into that 197, 198 range. Pretty hard rejection. We saw it back in late May. We also had a kind of a nasty little 2-day correction there too. But holy cow, the next day through 198, and they have taken that, they got it up 220s. Really a quick little 10% run in 1.5 days. But again, Apple at all-time highs on very solid volume. Again, going to have a great weekly charts, barring any insane happening as we close. But yeah, maybe
and Microsoft kind of flirting with all-time highs too.
Yeah.
And Apple, Microsoft are 44% XLK, just those two. They're like 22% each.
Holy cow.
So,
44? And then where does NVIDIA come in there?
It is only just under 6%.
NVIDIA. Oh, yeah. Wow. Look at that. 22, 21. And then we drop down to 6. Hey, and that's it. That's the name of the game. I don't get to pick how XLK is weighted. Maybe one day I'll get put on like a committee at State Street or something. But
hey, if it works, right?
When 44% of a portfolio is going to break to new highs, it is what it is. It is what it is. Now,
argue with the trend, right? You can, but it doesn't work.
If we step away and we look at our other two big U.S. indices, weekly chart, let's start with Russell. So I get pretty much the opposite vibes. Real rough. Russell, if we're using IWM, still struggling at that neckline from 2021 at 210. Tried a few times this year. And the last, especially after we had a big gap up on Russell. I believe that was Wednesday. Huge gap up. And we're at the lows of the week right now.
Yeah, it's not a very good looking weekly candle.
Russell just continued. It's got new relative lows. We're through the 2020 COVID relative lows. Russell has not. We're back to 2021, or I'm sorry, 2001. Just abysmal for the average stock, particularly on a relative basis. Russell has, on an absolute basis, it's not like it's falling through the floor.
No.
But yeah, relative, and then same with Dow. I think Dave pointed out we've got, it's not all-time relative lows in the Dow, is that right? Can't be right.
I think it's got a little ways to go yet, but it's getting there.
Yeah, I see you. Yeah.
Make sure it's like the
85.
same rough level if you go all the way back to what I'm guessing is like 1904 ballpark, roughly. Yeah. And you look at industrials using XLI.
Industrials,
That's
falling apart, especially like they look fine. If I look at a weekly chart of XLI,
they're
basic
holding
consolidation,
fairly.
yeah, pretty healthy. Everything else has had a very strong run off the October lows, and we're building out what is likely some type of consolidation. They're at the bottom of this range here. We'll see what happens Monday, but the relative
breakdown
are at just mid-April, early April. Industrials look great. We were almost in multi-year, maybe in multi-month relative highs, and just everything else. In fact, I mentioned this morning in one of my tweets. So today we have so year to date, relative low as of Friday, June 14th, industrial, energy, discretionary, material, financial staples, healthcare, and real estate. 8 sectors hit year-to-date relative lows today. Some of them have been there for a bit, and with small caps and mid caps also hitting year-to-date relative lows, it makes sense. RSP, I'm sure, is that we look at RSP, which is equal weight. Yeah, year-to-date relative. Yeah.
And utilities wasn't in there yet, right?
Utilities is not in there yet, but
I bet that pretty soon, I bet that's probably going to be joining the show there because they have not looked good here lately, which leads the only two, communication services and tech, which even communication services, I don't think you're gaining anything on a relative basis from participating there necessarily, like we've been using lately, hanging around.
Yeah.
But
either
got to be in tech or you got to be in the S&P.
About communication services. It's actually, if I'm seeing this right, back below a relative 200 day. XLC versus SP.
No, sure
Now it's bouncing today, and then of course you've got King Daddy, XLK, year to date, an all-time relative high, and that's the game. I wish we got to ask the dealer to just redeal, but unfortunately that's not the way.
Yeah, and even thinking through over the last couple of weeks, when you dig into a lot of these individual stocks, like industrial areas within some of these sectors, like industrials, energy probably going back a little bit more in industrials, but when you could really start seeing things on individual name basis really start drying up, especially in lately, like kind of the marine shipping area and areas like that, aerospace and defense. Those two areas were doing pretty well, especially marine shipping. Aerospace and defense was more so just not rolling over.
Yeah,
at least more so recently, but now
EPA today.
On boat, if you're using that for your marine shipping.
And then how many, when we do our daily work, and we mentioned before, obviously they get swapped around, but when you read through the history, take these sectors, and whoever gets talking about how many stocks are above a relative 200 day, and you can read through those threads and just watch the number fall off in each sector. For tech,
except for tech, that's pretty much it.
And even
like Communication services, I guess the numbers themselves haven't fallen off, but when you go through all those charts individually, there's really not much in there that gives you necessarily a warm and fuzzy feeling. So even there, I don't know what necessarily you would really want to participate in on a broad basis in that sector. Yeah, it's definitely narrowed.
Things and semi.
Yeah.
It's not like I think like your cloud computing getting crushed. Horrible year. So, and software taking XSW, getting crushed on around. I mean, we're back to the COVID lows on this high beta software stuff on a relative basis. Yeah, it's large cap, big company. Tell me if you've heard that before.
I feel like I've heard it once or twice, but that's the even with the Magnificent Seven, right? XLK's outperforming that now, and probably you've had a guess, probably because like Tesla is not really helping out.
Wow, yeah.
I mean, really, you're just looking for something that has Apple and Microsoft in it, and
if we
NVIDIA.
get to SMH, how much is NVIDIA within SMH? 20, 23 and a half. And then you got TSM behind that, where I think TSM has a beautiful, not any worse than yet. It is what it is. All right. So if we get off the drooling over tech stock, what has happened? Has anything happened? What about gold? Gold was supposed to be a warning that bad things were on the horizon. That's still hanging out there, right?
Yeah.
I don't know. It has fallen apart on a relative basis. Like everything. If you haven't gone up for the last month, 2 months.
Yeah, there's no relative chance there, really. Just really any type of metal. Copper miners rolled over, silver miners, gold miners. Just broad metals and mining. You know, SLX, so like your steel names. I think you should have yesterday. And that's a really rough look.
And look at that today, down another over 2%, just breaking that rate of trend.
Yeah, just basically once they got through a 200-day, I was in the elevator.
And I also lost that like 68, 69, 70 area. Tough. The rotation into, I mean, what we just got done talking about continues.
Right.
I assume that's where the money's going, or it's going into treasuries. Hey, look at these.
Yeah.
Treasuries. Maybe this is it. That feels very boy crying wolfish, but
yeah, a little early yet, but really showing signs of life.
Yeah, and we'll see. I think we've said a few times, including yourself, that I doubt, this is not probably going to be a V bottom. So this, who knows? You could stay in between. Yeah, who knows? Still a downtrend, but trying to break that, trying to at least not go down the rate. So we'll see.
Other than that, I mean, like international areas is pretty much getting smoked across the board for the most part.
Horrible week. Holy smoke. And we talked about they were really looking good on a relative basis. Not all of them, but definitely a few.
Europe, I mean, that's just horrible. Like a weekly on IEV. I mean, look at that candle.
Like Italy had been a year-to-date outperform. I mean, a lot of these areas, now a lot of it has been in the last February, but year-to-date outperformers, France getting crushed.
You know, Peru wasn't looking too bad. Kind of when, you know, like your mining names and metals and things like that were picking up speed, but that's rolled over with all your metals names, things like that.
Just a massive transports are a mess. Holy transports back to their COVID relative lows. Yeah, Austria, a lot of this stuff.
Really, the only one I found I think that looks somewhat decent is India.
India, after they got that lasted one day. Congrats to India. I don't know what you got going on over there. You got absolutely pummeled last Tuesday. In fact, how much were they down that day? That's pretty rough. Down 7% just last Tuesday. And we're back to all-time highs already. Relative chart, not amazing, though. That's what's...
No.
If I look at it, INDA.
Yeah, it looks really good on absolute.
Yeah, it looks great on absolute. I don't know if I'm doing anything better than NASDAQ, tell you that. Small cap India, same reaction, got crushed. Awesome bounce back. I mean, they were back to all-time highs by this past Monday. And then if cruise, a little bit better of a relative chart. At least it's an upward sloping 200 day. What about Bitcoin? Anything?
We're sitting out, just chilling there, really. Got to all-time highs earlier in the month, fizzled out. I'm just
Such a high beta asset. You zoom out and you're like, yeah, look at this tiny little range it's been in for the last month. Yeah, it's about a 7, 8, 9% range. Just
I think more so
we'll see.
recently, your miners really been doing a little bit better
They have been.
than coins.
So I don't know if that's a clue. Like we got some foreshadowing there. Yeah, because the Crips and the DApps are moving to year-to-date highs. DApps getting sold off a little bit today, but see. Dollar's strong. Dollar's back up. Dollars had a very good week. Definitely some separation there. Rates, interest rate, broken their trend, kept going. And the dollar and interest rates have been very correlated. We'll see if that's changing.
Yeah, and really, I know
the dollar will pay catch up and go down.
I know we talked about the yen. I don't think it was necessarily too long ago, but that at least on a somewhat short-term basis is
Trying
for now found a floor. Yeah,
trying to find a floor down here.
Your guess is as good as mine, but
Good stuff. China falling off. China's back at relative low. I mean, I'm looking at afters. I haven't been day to day. If I look at FXI, what does that look like? Okay, so not. Still downtrend. Pretty heavy downtrend on a relative basis, but all right, Kevin, I think that wraps it up for this week. Anything else you would like to leave our guests with?
I don't think so. Nothing really necessarily on the commodity front that's anything really to speak of. I mean, yeah, kind of like it's been lately, right? Kind of tech show for now.
Continues to be the tech show. Large cap
tech, right?
So we'll see. It's going to take a lot. It's going to take a lot of work to fix this. And how many counter trend moves, you can have. I mean, look how strong of a November and December we had from small caps and outperforming by 12% of alpha. And we've given, and now since then, have underperformed by 15%, basically. All right, everyone, that brings us to the conclusion of this week's episode. Thank you so much for tuning in, and can't wait to see you next week.
Have a good weekend, everybody.